final hour of the trading, you can see that we had a shift in market structure here, came back down into a bullish fair value gap. This is a buy side imbalance, sell side inefficiency, and order block. Then we started to see price rally back up into this fair value gap, but more specifically, it's into the opening range gap. And I'll show you what that is. Here's a 5-minute chart, and for trading futures, there's a separation between sessions. And if you look at where we closed on Tuesday and where we opened here, using the regular trading hours tab on TradingView. Okay, this is how you get that information. Usually it'll say ETH, which is electronic trading hours. When you have it on a 5-minute chart, or 15 or 1 minute or whatever, you can toggle it and it'll show you the gap that would exist as soon as we start trading the normal regular day session. So when we have that gap right there, it's likely to fill. But when there's a strong bias, and I was telling you what that bias was last night, I was suggesting that we would see what? Dollar higher up to that weekly bearish order block's opening price. That would send euro dollar weaker, and also it would put some willingness to see sell models come into the equities market. And we've seen, yes, there's a gap here, and usually it's a good idea to avoid shorting when there's a gap like this, but when there's a strong narrative in play, it'll usually go for the objective, which is that 4120 level. Again, watch last night's live stream, and that's where the sell stops and the rate on those would be if we lost the mean threshold that I mentioned for the S&P market. Because we had that gap lower and it was so close to getting down in to take those stops, it just opened, rolled right down into it, consolidated around here until noon. Why did it turn here? We'll get into that in a little bit, but right now just know that that turning point here at noon is something I teach anyway. But there's a confluence of events occurring there. Not only is it New York lunch, it's the midpoint of the day, and we had our objective met for the downside. And silver bullet, we'll look for that here inside of the 1-minute chart. Okay, we have up close candle here, which is a bearish order block after it's been broken. So a shift and change in the state of delivery. The market trades back up into that here during the 10 to 11 o'clock window. So for a 1-minute chart, you might look at this and say, well, I don't really see a fair value gap there, Michael. I don't see it, so therefore it doesn't work. No. If you listen to my Twitter spaces, and I've also mentioned it in the live session last night where I'm looking for inefficiencies and how I look at certain inefficiencies and know with a great deal of certainty that they won't fully completely fill in or rebalance because of lower time frames offering multiple passes in between ranges. Okay, and again, if you haven't watched last night's video or live stream, that's going to go right over your head and it's going to be of no help to you. But when you watch that video from last night, I go into great detail how to read real order flow. We're going to take this insight in what we're looking at with this bearish order block in between 10 and 11 o'clock. As I mentioned in last night's session and also many times in Twitter spaces, I don't look just at a 1-minute chart. So I have a intraday matrix where I look at 45-second charts, 30-second charts, 15-second charts, 5-second charts, and 1-second charts. That means every individual candle is as many as 1 second, 5 second, 15 second, 30 second, 45 second. So I go beneath a 1-minute time frame. If I know that I have a very strong bias, which is that 4120 level, again, I pointed to that last night. If we lost the last defense for the bulls for EM and S&P, I said then we would sweep out this very level here. Okay, so if that's the draw on liquidity, and we saw that because we broke down, we lost all the last line of defense for discount arrays to send ES higher, and in fact we saw that supported with the idea that the dollar index was in fact reaching up into its weekly bearish order block, the level I mentioned at the beginning of this video and what I called for last night. Because of those factors in agreement, we could look at this area in here and break that down into a lower time frame, even still, this is a 1 minute chart. So every 1 minute interval is represented by one candlestick here. This level here, this red line, we're going to look at that now on a 15-second chart. This is that same order block. Okay. So inside that order block, everything north of this line going up here, all that price action, we look inside that and we inspect it to see if there's any inefficiencies. And lo and behold, here we have it right there. So when the market tries to back up into that order block, it's not just simply because we're going into an order block that makes it a short. Just because it's going up into any old random up-close candle doesn't make it an ICT bearish order block. There has to be a narrative. That means it's going to want to draw down into the liquidity below 41.20. It's drawing up into a short-term premium. Algorithms can short only when it runs higher. That's how smart money operates. When it rallies up into this inefficiency, this fair value gap, they go short. Then the market starts to spool lower, attacking that sell side. So there's your AM ICT silver bullet. As I mentioned, I don't just simply trade on a 1 minute chart. I can do lots of these types of trades all day long, and if I was showing it to you on a 5 minute chart or a 15 minute chart, you would be lost as to why I'd be getting in and getting out, but yet still be profitable. It's these lower, very, very small time frames that I'm working with, and you can parlay your account up once you know what you're doing. Even on ugly days, really choppy, messy days, if you want to go in and find your 5 handles, you can use this method here. Okay, so it's a way of dissecting and looking with x-ray view into real order flow when you have a narrative, when the market's likely to go to a predetermined level for either inefficiency or liquidity. In this case, I mentioned last night, if we lost that mean threshold on even the S&P, then we would go lower and sweep out that 41.20 level where the sell side liquidity was. And we did in fact do that here. Is it a viable trade to take that? Well, if this is the stops at 41.20, is it unreasonable to see it go down 3 handles below that? No, of course not. There's just liquidity resting below there. So if we went down to 41.17.75, and assuming 41.27.75 is where you'd be getting in at, what's the minimum criteria for a high probability ICT silver bullet trade? It's got to offer what? 10 handles. Can it offer 10 handles in range to get that move? Yes. So this meets the criteria. Okay, so the stuff works, folks. Ultimately delivers it right here a couple minutes after 11 o'clock, 10 handles from up here. You wouldn't see that unless you had the information that's being offered in a platform that offers these time frames. TradingView just so happens to offer that, so it's a really good platform. I like it. It allows me to teach, comprehensively, and a lot of my students use it too. So I know everybody else has these platforms of choice like NinjaTrader and TradeStation. I'm familiar with TradeStation and all these other things that are available. I have to find a way to be able to meet the masses collectively, and I choose this medium. And when my community said use this as an alternative to MT4, I went here, and I'm glad that I did do that, because it allows all of us as a community to come together and see the same thing. I'm not all that proficient with using it. My students are teaching me all the time new things, but moving on. Now, when we got down below that 41.20 level, this was the first pass here during the silver bullet trade. Notice there's no obvious inefficiency, right? Because we're looking at it on a 5-minute chart. But that's that first pass through. Then it trades lower, and then it goes down to 10 handles lower right there at that 41.17.75 level. That's the low right there. Okay. Then at noon, it makes the low of the day. At the same time, look what's occurring in the dollar index. Goes right up into our weekly bearish order block opening price. This right here, this right there occurring at the same time we're below the stops and inside that sell side liquidity pool marks the end of the day. We're done. So now what's it going to do? It's going to consolidate until the last hour of the day. Why? Because Dollar has met our target. It's chopping around in here. Index futures are going to work towards going into what? Remember that opening range I showed you? There's a fly trying to trying to land on me. This is that shaded area here on that opening range. In other words, this right here. So that's regular trading hours being shown on a 5-minute chart. On a 5-minute chart here with electronic trading hours, so you see the ETH down here in the lower right hand corner. It's showing the price action on electronic trading hours. The last hour of trading, 3 o'clock going into 4, for the New York session, obviously it trades till 5 and stops until a restart at 6 p.m. for index futures. But we're seeing a displacement to the upside. There's a shift in market structure here. We have inbounds, fair value gap, and 3 consecutive down close candles. Order block, draw that out in time. Hits it, trades in the fair value gap here, and then works towards doing what? Getting up into that gap that it hadn't worked inside of all day. Remember, it opened here and spent all this time down here. Shift in market structure after 12 o'clock, which is a normal time when we see what? A lunch reversal. With this gap up here, I'm expecting to see, and I don't know because I'm talking to you live right now, it's 5 minutes after 6. I would expect to see it trade up into 41.58, close that in, and then see if it's willing to go any higher, and maybe bump this liquidity here in that little gap there. But more specifically, I would like to see all this filled in. Now, let's assume for a moment that it trades up and hits that, closes it in, and then we start to fall again. Dollar would have to be going higher. And if that's the case, then we'll be looking for, let me go back up to we'll be looking for these lows here to be taken out. These relative equal lows on the S&P.